Hello traders, welcome to the channel. Today 29th June, Nifty ends this week at 24,009 and Bank Nifty at 52,342. So before proceeding to the this week's market update, as usual, I will share a few important levels which I shared during this week. This one, I think I shared this post in last week video also. These levels are still relevant for us to understand why I am having some levels for next week. Okay, so that's why I am sharing again this post. When Nifty was trading around 23,521, I think on 19th June, okay, 10 days before, and Bank Nifty at 51,439. Both indices move differently, but at the same time there is no intermarket divergence. See, so the intermarket divergences probably in most of the time will be visible at least in hourly, okay, for a short-term trend reversal. So that's why I said there is no intermarket divergence because both made all-time highs. So the bearish structure has not yet activated. This is on 18th June. But in short term, expecting one more high to 52,300. The support levels also are shared. I will share that in next post. See, during that time, there are some bearish situations also. See, that's why I marked here whether the this high is completion of wave 5 or just one of 5. Do you remember? So, if the price moves higher, the fifth wave may also get extended. That's the reason I shared these situations, because the fifth wave not yet reached the minimum expectation target. That's why I have this option whether we are completing wave 5 or just one of 5. But you know, the minimum level target itself not met and it turned to be a extended one. I will share one more level where you can clearly understand Elliott waves clearly shows their work. Okay, let me share that. See, in Nifty not give a clear view. See, this is not very clear. So already shared, it needs to cross 23,700 for upside. So if the price comes below 23,300, there are chances of pullback or correction. See, the understanding on 18th June is it needs to cross 23,700 for upside. Why? If it crosses, this can be 1 of 5, 2 of 5 and 3 of 5 may proceed. Because we already have a view that Nifty can reach 24,200, which we discussed on 8th June itself. I will share that clip now, just a 40 seconds clip. If that is the case, why this wave 3 ends here? There is a lot more to go higher. So by bringing the larger view, I assume the wave 3 itself not over, all are part of subwave 3 of 3 of 3. This is what my count now. So where it may go to complete this 3 of 3 of 3, possibly to 24,200. See, this video has been recorded on 8th June. If you not yet watched that video, I request or I recommend to watch that video in your free time, because I explain a lot of things and also expected levels in 2024-25 for Nifty, Bank Nifty, small cap and mid cap. So that will be an very good information for our long term view. Right, in that video I said that this 3 of 3 of 3 may reach 24,200. So I have a larger view that if the 23,700 levels are crossed, there is a possibility of 24,200. See, I'm just saying why I'm having the upside target, because in a broader perspective, I have a minimum target of 24,200, right? So by having that larger perspective view, I marked 23,700 for upside, and also it can be 1 of 5, 2 of 5 and 3 of 5. See, always have a decision from larger perspective. Okay, have a larger perspective view and lower down the time frame to match your larger count. That's the best way to understand the market through waves. Okay, see, another interesting point is, if the price comes below 23,300, there are chances of pullback or correction. So this is where the Elliott wave making amazing work. See, the market decline. Okay, here, see 19th June. 19th June is here, right? 19th June. The price crosses 23,700. Yes, the price may reach higher targets because the waves are extending. But if the price comes below 23,300, there is a possibility of pullback. See the low, 23,350. It came very close to the 23,300 levels, but not cross that our limit. This is how the waves will work. So the expected 23,300 not crossed. So the bearish view still not open. Instead, it crosses above this high. And you can see the correction in 3 waves. Corrections are 3 waves. So it can be 1 of 5, 2 of 5 and 3 of 5. Got it? This is the way we need to approach the market. Okay, I'm just explaining how to count the waves. So in larger view, I have 24,200, and as on 19th June, the minimum target itself, the wave 5 not reached. So there's a possibility of 1 of 5, 2 of 5, that is wave 5 can extend. For that purpose, we have 2 levels crossing that extending wave 5, coming below this 23,300. See, I have marked this line, even 23,337. This is what the exact line I marked, that level not crossed by the price. See, exactly 23,337, and the low was 23,351. The price not give a bearish signal. Fine, this is the understanding, and this is how we need to count the waves. Fine. And if you see in Bank Nifty also, see on same June 19th, okay, same day of analysis, June 19th, I say the level should be read as 51,250 for the support level. Okay, see, during that time there is some bearish views are there, but I shared this level on 19th June itself. The support levels for Bank Nifty is 51,250 to 51,150, and it can reach 52,300. Okay, the support levels shared are this level, 51,250 to 51,150, and the expected target is 52,300, almost 1000 plus points. And you see what is the support Bank Nifty here. This is 19th June. Okay, I shared the support level here on 19th June, and the price support level was, see, the low made 51,144. Okay, the expected level is 51,150, and the low made was 51,144. The expected support range is 51,250, 51,150, and today's low made was 51,140. That is what I am saying. Okay, you can get the precise levels. So while talking about the precise levels, I try to posting some identification of precise support levels every week. So for this week, I'm going to share 2 complex patterns support levels. Okay, see, impulse wave marking is very simple, but for taking an entry, you need to concentrate on corrective patterns. See, in a complex correction, the identification of complex itself somewhat difficult. We need to wait for some price confirmation. So I share one example. This is on May 5th. Okay, one of our learner shared his view and asked for a review. and I shared this information. GMR Airports, when it was trading around 85.60, I think some corrections sideways is possible here. Okay, please understand, corrections or sideways is possible. Declining below 78 may confirm this. See, I always go like this. If you even see in Nifty, below 23,300, some corrections is possible. But at 23,300 protected and moves above the previous high, signaling that extending of fifth wave. Okay, I'm saying for understanding this. And here, declining below 78 may confirm this. And if it comes below that, there is a possibility to reach 70. This is on May 5. And you see, this I shared 2 days back. See, this is on 5th May. Actually, here, 85.60 comes around this level. This is a complex correction, not a normal correction. You can see. And the low made was 70.65. The expected support is 70. Right? Exact precise level in a complex correction. And now the price reaches 100. See, giving an entry here is the important. Analysis is different and trading is different. To trade by using the waves, you need to be strong in corrective patterns, because the best entry comes at the end of a correction. Right? Anyway, we have other alternate trading opportunity also, but best risk reward comes at the end of the correction. Okay, so in this complex correction, we have identified the exact low, 70 and 100, right? And one more example. So this is a complex correction. I have already shared many times, and I'm sharing it again now. Whenever you see a triangle in a complex correction, that will be the end of the complex correction. Okay, but how to spot a triangle in the complex correction is little we need to learn. But see here on 15th May, W, X, and this Y is a triangle. So whenever a triangle comes in a complex correction, the complex correction will end at the end of triangle, right? See, triangle will end at E point, and the fourth wave support is 613. So around 610, 615 is the important support for completion of this complex correction. The new wave may start upside. See what happened next. The price reached around 600. Okay, I'm not sure, but around that level. See, we can have some tools or knowledge to predict the exact low, but you cannot get the exact point all times. Okay, we will get sometimes, yes, for sure, but always have a zone. For example, 615 to 600 is zone. Okay, that's the support zone, or whatever be the target, have always a zone. For analysis part, we can identify some precise level, but for trading, giving entry, you need to make slight alterations in that. Fine. See, around 600, the price started moving higher, and this is where the best risk reward comes, even if you buy at 615, right? And you can see the price trading around 728 on 26th June, and you can see the two levels marked here, 800, 788. So this is the possible resistance zone. And also I have marked one more point also. See, again, it's not any recommendations, I am marking for my purpose. So possibly the price reach here, and while reaching here, we need to recount again. Okay, we need to reanalyze the waves. That's the idea here. So see the today's chart, it reached exactly our level. So we need to reanalyze again whether the impulse has been completed or not. Okay, this is also a complex correction. Okay, sharing two examples, exact low of 70 and the price reached 100, and a complex correction. And also here we got the exact precise levels, a zone around 615. Even if you get it 615, 800 is a good return, and this is called the best risk reward entry, right? If you want to learn the Elliott wave in more practical way and to identify the most precise levels, a zone, you can register my Elliott wave course. And as you know, I give a lot of importance to the corrective waves because that is where we need to give the entry. Impulse wave we can easily identify because by seeing itself we can easily identify the impulse wave, but corrective waves we need to put some work. And I have shared a lot of things and more practical examples for understanding the corrective waves, and you can have a and shared many examples for having a entry also. So the course is designed for analysis and also for taking trades. So if you wish to upgrade your Elliott wave skill to the next level, or if you want to become an expert in Elliott wave, you can register my course. All the details are given description. So what we can expect in market next week? For that, I go first to the daily chart. Actually, we already discussed this thing, and I'm sharing again. Okay. See, this is the longer term charts, and as I said before, if you not watched that Indian stock market video, please watch it. Just I shared on 8th June. You can view in my videos list. Okay, it will give a important knowledge and also what is the perspective. Okay, larger perspective view on our indices. So I don't want to take much time to explain the same thing, so I'm counting from here. So this is third wave, all are part of third wave. In that third wave, I calculate this as 3 of 3 of 3. So the minor waves can be 1, 2, 3, 4 and 5. Okay. See, this is what I shared in a small clip also. So the third wave may reach 1.618 times, and the 1.618 times comes to, let me check here, around 24,300. Okay, these are some rough figures. So that's why we expected 24,200 to 24,300 levels. So we need to watch 24,200 to 24,300 as a resistance zone, right? So we are having a larger perspective that this 24,200 to 300 levels can be a resistance and also a channel. Okay, if you draw like this, the channel top also coming at the same level. Whenever more than two resistance levels comes, we need to be little careful. We need to see the price action. What is happening there? Okay, so possibly this 24,200 to 24,300 may pose some resistance, and even if the wave 3 ends here, we may get a minor wave 4 and wave 5 to complete the third wave. Okay, so these are some assumptions, and and we will discuss if it happens what we can expect in this minus 4 everything we can discuss as and once the price develops. So with this idea, so 24,200 300 is a resistance. So with this idea, I'm going to check the minor subways. So this is the approach. As I said before, take a view from larger perspective and lower down the time frame. So 1, 2, 3, 4 and 5, right? So this is 1 of 5, 2 of 5, possibly 3 of 5, 4 of 5 and 5 of 5 may proceed. So this level comes to 24, 250, 300, whatever. So approximately 24,200 levels. So my assumption now is there's a possibility of still one more high may be pending. See, anyway, we are nearing the resistance zone. See, 24,200 and today's high was 24,174. And so already we are near the resistance only. And as I said multiple times, identifying the last high is always tricky. So what we may expect in this fourth wave? See, If the third has completed here, okay, the fourth may reach, you know very well, 38% to 50%. And if you see this wave 1 and wave 2 is very deep, almost to 100%. Okay, rules are satisfied. The wave 2 cannot go below the starting point of wave 1 for this impulse, for this minor impulse. This is the starting point of wave 1, right? This level 23,337. Do you remember in my previous post 23,337.55? That's why I marked this level 23,337. Now you got the meaning, right? So 23,337.55. You can see the low point here, right? That's why I marked this line, right? Fine. So this low not cross this low. So this is acceptable wave 1 and wave 2. So what we can get the clue? So this is a deeper wave 2. So we may get a shallow wave 4. So possibly 23% to 38%. So price already reached 23%, which comes around to 24,000, 23,977, and the 38% comes to 23,850. So the price may already get support here and can move higher, or if it comes lower, the important level to see is 23,854. Even this point also you can see, because since we are expecting a shallow, so 23,900, 23,850. So if even comes lower, the important level of support is, for this view, is this level around 23,800. Okay. See, initially I'm expecting support around 23%. It has been already done, but if it comes lower, 23,900 to 850 is an important support. Okay, 23,900 to 23,850 is the most important support. And if the price gets support here and move higher, so that is important. Taking support is one point, and moving above this high is important. So 23,850 to 23,900, we need to see if the price gets support or not, or maybe worst case 23,800. So if the price gets support here and moves higher, there's higher chance of moving to 24,250 to 24,300. That's all. 200 to 300 are somewhat plus or minus. Okay, this is the view. This is the update on Nifty. And Bank Nifty, we have a slight confusion where to take the wave 4. See, these counts are same. Okay, nothing different. 1 2 3 4 5, 1 2 3 4 5, and extended wave 5. Same logic applicable here. 1 2 3 4, and the fifth we are extending. Now the question is, wave 5 ends here like this, A, B, C. Wait. Okay, A, B, C. If this is the case, this can be 1, 2, 3, 4, and 5. Right? I'm explaining the concept also. Taking the low is very important. So this is the case. If the fifth wave is already completed, because 52,950, around 53,000 is an very good resistance. I have already marked this line. If the line crosses only, we can expect the higher range of 53,850 or something. Okay, but we need to calculate the low point for that. This I calculated sometime before, so don't consider this point now. So already the price reached 53,000, and if this is the case, the Bank Nifty already completes its impulse. But suppose, imagine if the low is here, that is, it's a triangle, because everywhere it's a triangle, A, B, C, D, E, and even small cap, mid cap also 5 subways. By aligning with that, okay, aligning with that, it can be A, B, C, D, and E. See, after this D point, the price has came lower. Okay, I think a red candle you can see. Okay, this red candle can be taken as E. There is not necessary to E wave to touch the trend line. So if this is the case, same like Nifty, we can have a 1, 2, 3, 4 and 5. This view to happen, check this low point. The price already reached 38%. So the important support level is 52,150, right? But the nature is speed. So I have two options here. The Bank Nifty has already as a possibility of completed the wave 5 here. Okay. So that is where the intermarket divergence come. I will explain that also. Don't skip the video. You will have a lot of learnings. So for this view to work, I mean one more high in Bank Nifty also, the Bank Nifty should support 52,150. And remember, this price should not cross below 51,950. What is this high? 51,940. Okay, approximately 51,940. Some minor differences will be there. The price should move higher right from here or 52,150. But suppose the price comes lower below this, even you can take this level also. 51,942. What is this high? 51,870. So 51,942, 51,870. If the price comes below this level, 51,870, then there is a higher chance of wave 5 has been completed. And what may happen is this come here and the price may move higher for a B wave and come lower. But while making this B wave, this Nifty can make a one more high, so that the intermarket divergence may appear in the between Nifty and Bank Nifty. This is how the market works. Okay, but the price gets supports here, and there will be no intermarket divergence, and you can go with this count. So this is the view now. So for Nifty, the support level is already at 23%. So 23,970, the price may start moving higher, or it may get support mostly between 23,900 to 23,850. So worst case may be 23,800. It should start higher. In Bank Nifty, the price already reached 38% and came below that. So still, I think one more wave is pending in downside. So possibly the price may get support at 52,150. That's the important level. But the price, suppose if comes below 51,870, there is a higher chance that the correction has been there is a higher chance that impulse has been completed. And as I said before, it can be ABC, and the intermarket divergence may appear and the corrections may start. Fine. So this is the update on Nifty, Bank Nifty. And you see, this I shared on Twitter also. So this is all aligning with the Nifty and Bank Nifty. So one final wave may pending in the small cap also. See, while the Bank Nifty are working well, the broader markets are not moved higher. Many have shared in Twitter that Nifty is moving higher, but my portfolio is down. But the reason is probably the broader markets in sideways pattern, which is fourth. If the price moves above this trend line, maybe after pullback or straight away, then the broader markets may perform this week to complete the wave 5, right? This is small cap 100 and mid cap 150. There is no counts. Okay, the same count 1, 2, 3, 4 and 5, and yes, sideways consolidation possibly has been completed. A, B, C, D, E, and eventually the price needs to break above this trend line for confirmation, right? You can connect like this because 2 points is necessary. Fine. So it needs to cross above this trend line, and the mid cap 150 also will complete the fifth wave. Right. So this is the update on Nifty, Bank Nifty, broader markets, and I will show the inter-market divergence also. So this is the reason I said a doubt I have in Bank Nifty, because you see most probably will have a inter-market divergence. See, this Bank Nifty made a lower high, but Nifty, the top chart is Nifty and the bottom chart is Bank Nifty, and this Nifty made a higher high. This results in the inter-market divergence. Since it is appearing in only hourly, so the impact will be also on smaller duration only. If it appears in daily, and the correction will have a bigger impact. So this is the reason I have a mild doubt that whether the Bank Nifty has completed or not, because inter-market divergence appearing only in the final wave. So anyway, have this option also, and yes, it may have one more high in Nifty and one more lower high in Bank Nifty. That also possible. We see all the options in this video, right? So please have this intermarket divergence also in your analysis part for identifying only the tops and bottoms. Okay, mostly for tops and bottoms. Depends on the time frame. It can be visible in 5 minutes also. Okay, if you check the 5-minute chart, you can easily spot the intermarket divergence, and the intermarket divergence will get resolved as soon as possible because we are identifying the divergence in a 5 minutes chart. So based on the time frame, it will have an impact. So this is the update, and Nifty, Bank Nifty. So the levels also we have discussed. I hope you enjoy this video. I most probably will give some practical tips in every video I post. So something I try to give some useful information to you. If you are Elliott Wave learner or interested in wave theory, you can subscribe the channel, because I try to give more practical informations in each and every video. It may help you in advancing in your Elliott Wave approach in day-to-day markets. Or if you wish to learn the Elliott Wave in more practical way, as I said before, understanding the turning points of all the 8 waves with precise levels, impulse wave 1, 2, 3, 4, 5, and the corrective waves A, B, C. So you can identify the precise levels of support and resistance in all the 8 waves. I have a course, the purest form of Elliott wave trading. Waves leads the price. I have shown lot of times in YouTube and on Twitter that how the waves are leading the price. With the help of waves and Fibs, we can identify what may happen in the future. So it's an advanced study. In today's video also, I shared few examples that on June 19th itself, we identified that Nifty reached 24,200. It has been done. And GMR airports, when it was trading around 85, we identified 70 is the turning point. And the complex correction from 615 to 800, from GMR airports from 70 to 100, see the percentage, and you can easily get in the best risk reward entry. So if you want to learn all these things, you can register my course. I give the details in the description. Thank you. Thanks for all your support. I hope you enjoy this video. Happy weekend. Trade safe. More than a profit, our capital protection is important. So trade safe. Take care. Bye.